Good morning, good afternoon, and good evening. My name is Jim Sutter, and I'm the CEO for the U.S. Soybean Export Council. Welcome to our U.S. Soy March Planting Intention and Quarterly Stocks Report update. Today, we're coming to you from various locations around the Midwestern part of the U.S., and many farmers are anxiously awaiting for soil temperatures to rise up just a little bit so they can get seeds in the ground, and those seeds can start growing to grow another big U.S. soybean crop. There are two things I want to share with you. One is the focus of this program, so I want to tell you what to expect. And the other I want to start with and talk a little bit about high oleic soybean oil. One of the newest innovations that benefits the retail, restaurant, and food industries is high oleic oil. It's known to extend shelf life. It offers among the longest dry life of any edible oil and provides a neutral flavor. With enhanced functionality, longer fry life, improved shelf life, desired neutral flavor, and improved fat profile, it can be used for many purposes, frying, baking, etc. It provides superior performance in many ways. And to take advantage of these benefits and to source your supply of high oleic soy, buyers need to begin initiating those conversations now for the 23 and 24 crop. I know that sounds a long way away. And why am I talking about this tonight? Well, as our guests, you're getting a sneak preview as next week our team will roll out the 2022 High Oleic Soy Sourcing Guide that will give you information about exactly how to do that. It has great stuff, information on acres, contact information, etc. So be prepared for that. We want to make sure that you have that information available to you. Now, let me talk about today's program, what you've really come to hear about. The only thing that's certain these days seems to be change. And the world is changing, and businesses must develop strategies that allow them to take advantage of the situations that they find themselves in. Right now, there's a great deal of risk and uncertainty in your business. I don't have to tell you that. You live it every day. South American weather, the Ukraine situation, the costs of inputs, inflation, interest rates, just to name a few. But hopefully the information and the insight shared here with you today will allow you to look at your strategy, and these insights will help you to make some decisions that will put you on a little bit better path than you would have been otherwise. We are very lucky to have with us today the U.S. Department of Agriculture's chief economist, Dr. Seth Meyer. He's going to provide insight and perspective around the U.S. planting, acreage shifts, and global trends. And I'm sure he's had a busy day, so we are very lucky to have him here with us. Then we're going to sit down with three farmers, Tim Bardole from Iowa, Jim Douglas from Indiana, and David Nichols from Tennessee, to learn more about their farms and how these significant changes are impacting what they're going to be planting. After that, we'll open it up for questions, and I encourage you to send these to us through the chat, and we'll do our best to get to them as we're going forward. But first, and as usual, it gives me great pleasure to introduce our very own Vice President of Market Intelligence, Mr. Mac Marshall, who will kick us off with a brief overview of the USDA report that was released earlier today. Thank you all for being here, and I look forward to the insights and perspectives that will be shared. Don't forget to input your questions. Thank you. Over to you, Mac.
Thank you very much, Jim. There's lots to cover from the reports today, so I will keep my comments brief so we can get to the meat of the discussion with Dr. Seth Meyer, Jim Sutter, and our grower panel. Now, of course, the big news from today's prospective plantings report is the projected soybean area of nearly 91 million acres, which if achieved would be a record, surpassing the 90.2 million acres planted in 2017. Now, these 91 million acres represent a nearly 4 million acre increase from last season and generally represent some shift away from corn, which has seen area drop from 93.4 million planted acres in 2021 to 89.5 million as of today's report. And this would only be the third time in U.S. history where farmers would plant more soybean acres than corn. Other years are 2018 and 1983. So I'm very excited to get to our farmer panel so we can get some firsthand insight into the on-farm factors contributing to this shift. Now, you see on the slide here the states that were exhibiting the largest changes from last year: Illinois, Missouri, Minnesota, Iowa, Tennessee, South Dakota, and North Dakota, which last of which is actually showing a reduced area for both corn and soybeans. But in total, 8 states are projected to plant record soybean area. Now, of course, this is just based on intentions of where we are in this year. Very few combines are actually rolling yet. Now, broadening our look to across the major row crops of corn, soybeans, wheat, cotton, sorghum, barley, oats, and rice, total area across those 8 major crops is projected to be just over 254 million acres, up about 700,000 acres from last year. And this would be the largest planted area since 2014, where the US planted nearly 258 million total acres across those 8 crops. Now, as mentioned on the previous slide, corn acreage came in under market expectations. Soy, wheat, sorghum, oats, and rice were within the trade consensus, while cotton and barley came in above the trade consensus. Turning to the quarterly grain stocks report, March 1st, soybean inventories were estimated at 1.931 billion bushels, which was within trade expectations and a 24% increase from March 1st, 2021. Now, these inventory levels imply disappearance for the December through February period of just over 1.2 billion bushels, which will be the second largest pace of demand during that December through February quarter, trailing only last season, which of course was a really aggressive demand period. So that concludes my brief remarks here. Let's jump right into it. It is my esteemed pleasure and honor to welcome to the program Dr. Seth Meyer, the Chief Economist for the United States Department of Agriculture.
Thanks, Mac. Happy to be here. Happy to talk to you about what we saw in today's report. Actually, really excited to hear from your producers as well today, because I think what we saw in the report for corn and soybeans. Now, I know you showed that some of them were on the edges of trade expectations. I think they were real shockers to some extent. I thought that input prices might be having an effect, but I think we saw that really shine through today. I think some of the risk and some of the other elements really surprised us, and lots of bean acres, less corn acres.
Well, it really underscores the value of getting this data on a regular basis and making sure that you have a robust survey state by state, which of course you do here. And really, I think to better understand the, what exactly factors into those decisions. And obviously we'll hear directly from our farmer panel in a little bit. But what are some of the things that jumped out? I mean, you said that the trade was, I think, maybe caught a little bit flat-footed on some of this. We certainly saw a palpable price response on, harvest contracts for both corn and beans today. Over the coming weeks, now again, these are just intentions, of course. Over the coming weeks, there's certainly a lot of dynamics to play, certainly weather and everything. But given the surprises today, what market is assessing this right now and digesting all the information from today?
Well, and to some extent, this USDA report is a bit unique. A lot of times NASS goes and measures what is, like the stocks report that you were talking about. I think it was really overshadowed by the acreage report because there wasn't huge surprises in it, but that's actually NASS asking farmers, what do you have? Or getting from the elevators, what do you have? This report, the acreage report, is a little different. It's like watching two people negotiate a price, but you only hear the opening bid. The farmers put out their bid. They said at these prices, we'll plant this many acres of beans and this many acres of corn. So it does provide at least a short window for the market to try and say, hey, we want a little bit more corn. And try and get it from the producers. And I think that that's what we saw today, at least a little bit of the market saying, we're going to move corn prices a little bit higher and bean prices a little bit lower. We're going to try and pull some of those acres back into corn a little bit. And I think it'll be quite interesting. I think your producers have a really great perspective on this, because if we looked purely at price, it might suggest we would have hit what the trade thought about corn prices. But I think the other side of their balance sheet on costs and the cost of nitrogen and other costs of corn versus beans, I think is what led us to this report today.
Well, we typically talk about those harvest time ratios and, the rule of thumb about, 2-4 kind of being a break point, of course, soybean price ratio to corn price ratio in terms of what would favor one crop over another. But it seems like this year, maybe more than any in recent history, you can't just look at the revenue side. You can't just look at those prices. You have to look at total profitability and just the differentials in input costs from one crop to another. And of course, that's going to have regional differences as well, no?
No, absolutely. I think your producers have nice thoughts on regional availability and thoughts about application of fertilizers and inputs. Here in the U.S., we let the market try and bid for those farmers' lands, and that's exactly what we're seeing today. And they've got to take that other side of that balance sheet and the risk on those inputs. And again, I think that's what we saw today. And the market's trying to decide if it can pay them enough for that corn to tease away a few acres of corn from beans.
Well, one recurring theme, and again, we'll get to this, I think, during the producer panel in a little bit. One recurring theme and question that I've been asked a lot over the last couple months is, certainly with fertilizer prices coming up, what are you expecting in terms of acreage? I think anybody who's working even adjacently, to production agriculture in the U.S. has been getting this question a lot. And, in many parts of the country, I think it's important to remember farmers are wanting to stick to that corn soy rotation simply because, the agronomic benefits, right? You want to make sure that, just because you're getting price signals in one year, that's not going to dictate everything. You have to balance agronomy too. So there's a balancing act here, certainly between those two crops. I want to touch on something here just in terms of methodology. So indulge me on this. Now, what is the timing of the survey period in which you're actually surveying producers here? Because I think it really matters for this year.
No, absolutely. So the producers are asked early in March what it is that they intend to do. So you're asking them at the beginning of March, when really for most folks, some of your panelists to set aside, those beans usually aren't going and corn aren't going in for several weeks now. So again, you're surveying them on what will you do when in many locations things don't really get rolling till end of April, beginning of May.
I think given a lot of the market disruptions, and certainly we've had the input cost disruption, as a backdrop for many months now. I mean, the escalation that we started seeing, in the fall, really kind of during input purchase and positioning season, has really taken off. I remember talking with a number of people throughout the fall, and if I said, yeah, I heard anhydrous was $1,200 a ton this week, they're like, no, it's already $1,400. That's already out of date. And just kind of, a recurrence of those kinds of discussions, I think illustrating just how dynamic the backdrop of everything is from an input standpoint. But, certainly, you said the survey is happening in early March, and we've certainly had some major disruptions across global commodity markets in the weeks leading up to that. And, seen a lot of, significant price signals. Certainly wheat's had a huge rally in price appreciation over that period. But we didn't see wheat acreage, take too much from some of the other crops. So what's your assessment of, I think, the different competing price signals across those three, major broadacre crops in the U.S.?
Well, so I think we need to go back and remember kind of Russia and Ukraine is on our mind, but we didn't get here overnight. We didn't get here with these higher prices overnight. We can go all the way back to fall of 2020. And I think many of your producers would say prior to the fall of 2020, maybe their sentiment wasn't so positive in terms of prices. 2020, China comes back into the market. Demand is robust. We see corn and beans really, part of this domestic, part of this export really shows some strength. Then we get to around to the middle of 2021, Russia, crop doesn't look so good. They're talking about export controls. Wheat grows its own legs and prices start to rise again. And then I think the latest issue is simply Russia, Ukraine, the ability to export wheat, and the ability to grow corn for the Ukrainians here. And they're their crop calendar, very much like the Iowa and Indiana farmers. So they're very anxious to get out there in the field. And the real question is peace and diesel fuel, right? There's big questions out there for those producers. And I think that's overhanging the market and causing a tremendous amount of uncertainty. I think the market's looking forward to next harvest, it's looking forward. So South American corn, US planting, and on and on.
Well, I mean, let's look at that whole annual crop calendar, I think, and reconcile global production here. I mean, we're not doing a WASDE webcast, but I think all of this is still really relevant. And you know, like you said, you're looking for the next harvest. You're looking when, you know, relatively a globally tight inventories across, you know, the major cereals and the major oil seeds, certainly the major veg oils, which I want to come back to in a minute. And you know, the next thing in sight is that South American you know, corn crop and the soy crop, but of course the soy crop is you know, not been doing well. So if we're focusing on the soy complex, you know, the next major line here is what's going to be unfolding with the U.S. production towards the end.
No, absolutely. So over the course of the last 3 months, we cut Paraguay, Argentina, Brazil, soybean production by 30 million metric tons, a little over 30 million metric tons. That's a big divergence in a market that where demand is pretty solid. So that also, you know, there are a lot of things that have kicked us off and got us to this price position before the war. South American harvest being one of them. I think now we're looking forward to second crop corn in Brazil following that soybean crop. Soybeans went in early in Brazil, didn't fare well. The corn went in early, which is usually a sign it's got a better chance because when the rain shuts off, but there are going to be eyes on that crop because it really does have to have that rain through May. So the market's really looking for the next harvest. But when it comes to soybeans, it is really the North American crop that it's got to look forward to that for oil seeds.
Yeah, no, I think the relief, you know, for the global marketplace probably can't come fast enough. And that's why, you know, it's certainly exciting to see that we have so many beans, you know, projected to go into the ground this year. You know, certainly we had a lot of utilization last year in the US, you know, very, you know, banner export year, banner crush year, and all of that up, you know, naturally contributing to the market signals, which are allowing, I think, you know, some buying back of beans in terms of acreage, and that relief is going to be really critical. But you know, maybe it's early to say, but you know, what are you hearing? You know, whether it's through you know, other parts of World Agricultural Outlook Board, under USDA Office of Global Analysis. What are some of the indications on the potential weather patterns that we could be seeing, you know, later this year? I mean, certainly South America had 2 straight years of La Nina. Is there anything, you know, potentially impactful for the U.S. this year, knowing, of course, it's very, very early?
Yeah, no, absolutely, it is early. You know, we've been having discussions about what we refer to as a double dip La Nina and kind of what patterns set themselves up there. There are some relationships, they tend to be a little bit loose, but there are some relationships here where our producer in Indiana might see a bit of, it might be wet. It might not, I mean, it's not going to be dry, but in the West, there's not an expectation. In the West of the United States, we'll see a break in that drought. And right now we've got a little over 70% of our winter wheat crop in drought. So it's going to have some challenges when it comes up and running. At the same time, you know, some places that had been in drought, like eastern North Dakota, looking pretty good. So yes, there are some La Nina patterns, which probably would normally tell us we're going to hold on to the drought in certain locations. If we go east of the Mississippi in some locations, we might be wetter than normal.
Certainly a lot to unfold there. And of course, we had very dynamic weather patterns last year for much of the, you know, there's a lot of the soybean crop that was, you know, in drought regions, potentially under stress, but, you know, across the whole country, you know, really overcame that, produced a record crop. You know, I think real testaments to the you know, resilience of our producers here in the U.S. I mentioned veg oils and just kind of the stage setting here. You know, going back a few minutes. You know, we started talking about that price rally that's really kind of, you know, taken over the market since fall of 2020. You know, and I think part of the backdrop for that, you know, certainly on the soy side, we had a lot of that led by the oil part of the complex. And you know, a lot of contributing factors there. But I mean, if you look globally, if you know, looking across all of, you know, the major oil seeds, You had a short crop in Canada. The year before that, you had short crop of canola, excuse me, and soy as well. Canada was, of course, really hit by the drought last summer. But the year before that, we also had, short crops throughout the Black Sea and the European Union for sunflower seed. And of course, in Southeast Asia, there's been an older part of the tree cycle, kind of taken some palm oil out of production. And now we're starting, I think it was announced earlier today or yesterday, I can't remember, Russia is issuing export quotas on sunflower oil. What's your read on that and how that can be even more of a contributing factor to I think this very robust dynamic situation in terms of oil prices?
Yeah, and again, I think vegetable oil is kind of it's a similar demand has been pretty good in the United States. We've seen pretty robust vegetable oil demand. We've had some production hiccups, and then I do think you see further some countries putting on export bans, and it's not just sunflower oil. Some other countries putting on other export bans, which just really transmit some volatility into the global market as well too. Some folks who have a strong preference for a particular kind of oil, they're going to pay the price for that. The Ukrainians export half of the world's sunflower oil. So if that really is what you prefer, it's going to be a tight market potentially for that product. So there may have to be some substitutions across those. I think we still have a pretty, we've seen really, again, good demand. But I think those export controls don't help. They don't help. They add volatility to the market. And it's just not something we do in the United States.
No, and that last point is really well taken. I mean, one of the things that, that Jim Sutter always says is one of our hallmarks is being a reliable supplier. And it's definitely not something to take for granted. And, again, I think going back to, where we're looking for potential area for this year and by extension, production under, normal weather patterns and everything, that should be, I think, favorable for, beans making it into the marketplace. I want to go over to the grain stocks report just for a minute here, because obviously we're paying a lot of attention to acreage and we're talking about some of the international dynamics here. But for grain stocks, we saw soybean inventories, climb year on year relative to March 1st of last year, but still, overall reflective of, I think, a really robust demand environment. What are some of the contributing factors of the demand pace here at least over the last quarter?
So I think, and I'm not sure I can give you a great amount of detail on the last quarter on the demand side. I think we continue to see strong demand for soy oil in the United States for biodiesel production, renewable diesel production. Our food demand tends to be fairly inelastic with respect to price here, so we're not very responsive to price, but food demand in the United States has been really strong. And only more recently, now that we've seen food and price inflation, do we see people pulling back a little bit in more recent periods. So I think part of the story in the United States is, again, a demand one where we've seen strong demand, even though we've been strong demand for things like biofuel, but we have started to see prices cool demand a little bit, including that kind of robust growth in biofuels.
Sure. So, that's, obviously primarily on the oil side, but, we've seen, I think, renewed strength on the meal side, at least as demand's concerned over the last couple of months. One of the contributing factors, as I understand, is, when you're looking for high protein, for animal rations and everything, over the last couple of years, synthetic amino acids have been out there, but now, I think due to some of those supply chain issues and international trade rigidities, it's really, I think a lot of buyers are recognizing it, and users within the U.S. and domestically of the opportunities with soy meal here, and we've seen a surge in demand on that side too. So it looks like the whole complex is kind of being weighted strongly in terms of demand for both sides of the complex.
And those domestic hog producers and poultry producers need that break, right? Because relatively speaking, meal's relatively cheap in the value of the whole bean, but corn prices, they're seeing that feed cost. So, the hog folks and the poultry folks benefiting from some of that availability.
And I think, a couple of our producers will be on the panel here actually have integrated operations with hog farms as well. So you kind of get the full picture here, right? I mean, I've said it before, like nobody bears more risk over the course of their whole life than farmers bear in one season. And I think when you have that integrated operation, obviously you're managing input costs on the farm side, and then you're managing input costs on the animal ag side. So, any relief that can happen whatsoever is welcome. It's just that there doesn't seem to be a lot of relief coming, at least on the farm input side. It's definitely challenging. So actually with that, I want to encourage our audience to, keep submitting questions, because we will have the grower panel coming on in a second. And then after that, Dr. Meyer and I will be back on to take your questions. So encourage you to, continue to submit those. And with that, it is my pleasure to, reintroduce our CEO, Jim Sutter, and our fantastic producer panel. Jim, the floor is yours.
Great. Thank you, Mac. And thank you, Dr. Meyer. What insightful comments. I tell you, hearing it from the experts, that's what we just were able to do, kind of looking at that national level. Well, now we're going to take it down. And you heard a lot of references to at the farm level. And we're represented today by three great grower leaders. And I call them that for a specific purpose. These gentlemen are all volunteer leaders within their own state and the national soy organization. These gentlemen they take time away from their operations to volunteer in leadership roles, and we really appreciate that. And here's another opportunity for them tonight to be able to do that for us. Now, we talk about the reliable supply in the US, and thank goodness we've got a reliable transportation network and export industry. But I would argue, and I think the point was made earlier, that the reliability really starts at the farm level. So that's what we want to talk about tonight, is what makes this so reliable, and what makes these great farmers, what keeps them going. So we are going to move from west to east. I'm going to ask each of our grower leaders to introduce themselves. Just tell us a little bit about their family, their operation, maybe what they grow, where they market it. And then we'll come back, and I've got a few questions for them. But we are going to start with Tim Bardole from the state of Iowa. Tim, over to you.
Thank you, Jim. I farm in central to west central Iowa. I farm with my father, my brother, and my son, and we raise soybeans and corn. And we also have a 5,000 head finisher that we custom feed hogs, and a 5,000 head nursery. We've been no-till for 30 years. And we use cover crops. My son's the 6th generation farmer and to farm on this land. And we also farm 3 farms that have been within the family for over 120 years. So we definitely have deep roots, and we very much care about the land and about the products that we produce. So.
Great, thank you, Tim, and what a great story. I often say one of the sort of ultimate measures of sustainability are these multi-generational farms, and when you have land that's been in the family for 120 years, that must be sustainable. Okay, now we're going to travel a little bit to the east, and we are going to hear from Jim Douglas from Indiana. Jim, over to you.
Yes, Jim Douglas, 4th generation farmer. Farm with my son James would be the 5th, and my wife and I have 5 children, 14 grandchildren, and so very proud to be there on the farm during my career. And we raise soybeans, corn, and hogs. Have a wean to finish hog operation. Raise non-GMO corn that we sell into the export market on the Ohio River, and raise Ohio Lake soybeans, and the rest of the bean acreage is seed beans for the next year's crop. We utilize our hog manure back to the crop rotations, a sustainable factor there. That has really came into play as these inputs have got tighter and tighter. And, we appreciate that. We've just never seen a situation where these inputs have been scarce. with price and now maybe even availability as the season gets closer. So a lot of farms have these inputs already secured. You know, we've got enough corn and beans, fertilizer for our farm, what we need. We can switch, we can flex some acres, depends on the planting. We would like to grow about 60% corn, 40% beans. But if the season doesn't work out, we've got enough beans on hand and whatnot, we can go to a 50-50 rotation. You know, my message to the buyers would be that, you know, I think the farmers in the US are geared up to plant this crop, and, you know, it'll go in and should be a successful season. And so we should have an ample supply to provide to everybody. Thank you.
Great, thank you, Jim. And yeah, you touched on the availability of input, something that we've just been taking for granted up until this year. So it really is an interesting situation. Okay, for those of you who are kind of picturing a map of the United States, we're going to go a little further to the east and a little bit south. And we're going to hear from David Nichols from the state of Tennessee. David, over to you.
Thank you, Jim. Yeah, as Jim mentioned, I'm David Nichols from Tennessee. We live and farm in the northwest corner of the state of Tennessee, which is just east of the Mississippi River. And we grow soybeans, soft red winter wheat, and corn. We are a 4-generation farm family here. Have 2 sons, Tyler and Tanner, that farm with me, very active in the operation, as well as my wife, Ginger. And each day you can find one of these family members out in the fields or in the offices, or it's truly a family operation. We also operate a seed dealership here that we've grown as well. We supply several farm operations in this area with seed as well. Our soybeans and wheat go to export markets where, as I mentioned, we're right on the Mississippi River. So all of our soybeans go to the export market, as well as our wheat. Our corn, we do have some domestic uses for it, as we have an ethanol plant nearby, but also some of the corn hits the river and goes to New Orleans too for export. As I mentioned, we grow soft red winter wheat, being far south as I am, that allows us to be able to double crop those acres. That is a planned practice that we use annually. And we see those wheat acres back into soybeans each year. And that's a big part of our operation, is that double crop acre. It doubles up our workload some years, it seems, but anyway, it's a good practice for us. It's good for the land, and also it provides more profit for our operations. And also mentioning, just being a little bit further south in the country, our weather's a little bit warmer, and we actually have a few soybeans already planted. Just kind of got the planter out of the shed, make sure everything's working. And so we actually have seeded just a few acres, which is really early for us, but our research has found that we can bump yields a little bit by those early plantings. So we're trying to experiment a little bit also and learn as we go. I always tell my sons, if we don't do something different, we don't learn. So we're always trying new practices and trying to push our yields higher as well.
Great, thank you, David. And I think that's a real hallmark of our U.S. producers, is that they are always trying to learn and trying different things. And I'm sure also, I bet some people around the world that are listening are probably breathing a very small sigh of relief that some soybeans have actually been planted already. So that's a start to the 2022 crop. Well, now let's come back and talk about an issue that you talked a little bit about, but I want to make sure we hit it, because I know this is on top of everybody's mind around the world. Is this acreage and what it looks like this year, and if there's any shifting taking place. So I'm going to come back and give each of you a chance to comment on whether you're doing anything different this year than you did last year, if there's a change in your crop mix. So Tim, let's go over to you. Let's start with the Iowa perspective.
Yeah, we're just keeping with our normal rotation. This year we'll have a little more corn than soybeans, just because that's how it that's how it hit. But most, I don't really know of anybody that's really changed anything, and a majority of the fertilizer is already on for the corn. So I don't see anybody really switching, but we're further north than some. So we're able to put our fertilizer on in the fall and nitrogen on in the fall. So it's pretty well set.
Okay, and I think that might be interesting for people in the audience that don't necessarily understand the differences. In the northern part of the country, you use a slightly different type of fertilizer and you apply it in a different way. So that's something, you know, people often think of how easy it is to switch. I think what you just explained maybe give some information that maybe that's not so easy to switch. Let's go over and hear from Jim Douglas on the same question, Jim, about the acreage mix this year versus last year and anything about that.
Well, like I said, we want to raise about 60% corn, and we're prepared if the season doesn't work out that we'll go to 50-50. But, you know, like Tim said, I mean, you know, they say that a lot of nitrogen went on last fall in the north. In our part of the state, it's just not a practice that's used. But with that being said, that will take a lot of relief off the supply system with that nitrogen being on in that part of the country. And so that's in the US's favor, the farmers. And so we'll just see. I mean, it'll come down. I mean, country's kind of stressed in the trucking industry. That's a big component when it dries out and these planters get ready to go. You know, all things have to fall in place, and we've had quite a bit of hiccups in everybody's system. So it probably will not be like normal.
Yeah, I think we're all kind of wondering what is normal anymore these days. But so thanks for that explanation. It sounds like there's there is still some room to switch in your operation. You've got a little bit more flex depending what happens. All right, and let's go, David, could you comment on that question, please?
Absolutely. As mentioned, we're further south, so our practices are a little bit different than Tim up in Iowa. We're warm enough we can apply fall. We can't apply fall nitrogen, so we rely on in-season applications of that in the spring. So that we're up against a tremendous increase in that input side of things for corn. So in my operation, our corn acres are going to be cut down quite a good bit from last year. In 2021, we were almost 50% corn. This year, we're going to be down to about 30% corn. So we're cutting corn acres quite a good bit. We're bumping up soybean acres to replace that. Our winter wheat acres are about the same year in, year out. We try to keep that number pretty close, but we actually cut those acres just a little bit just because of nitrogen cost. When we were planting this crop back in the fall, we saw those prices start to escalate, and reading reports, we thought that was fixing to be an issue. And as it turned out, it has been even worse than expected. So we did actually lower those acres somewhat just because of nitrogen. So in this area of the country, I think soybean acres are definitely going to be up.
Okay. Well, good. You know, and you can see for the folks listening, I mean, you can get quite a difference of opinion or a difference of a situation depending on the geographic location. And I think that's one of the things we wanted to express to the audience tonight. Now let's go to one more question here, because I know people around the world are all managing a lot of risk, whether they're feeding chickens or they're, you know, running a crushing plant or making tofu, or, you know, they're all managing risks of various types. On your farms, you're managing risk too. Could you just give us a real quick highlight on kind of what steps do you take to manage risk on your operation? Tim, I'll start with you again.
Yes, well, you know, every year the risks are different. The past 2 years, we have paid for fertilizer much earlier than normal. Last year, about this time is when we bought the anhydrous for nitrogen, and not much later we did the P and K. So you know, a lot of it's just watching the market and having the people on the supply side talk to you and tell you when things are going to be tough and go that route. We really don't try not to change much just because of 1 year for like crop rotations or anything like that. And definitely use the board of trade to price crops out into the future, just to kind of limit risk on that side and kind of know what we have to work with.
So it sounds like quite a varied menu of things you do to manage the risk in your operation. Jim, how about you?
Yes, over the last few years, we've made quite an investment in on-farm fuel storage, fertilizer storage, and grain storage. So all three of those categories, which we wasn't thinking about this type of event, to drive that, but we did think that it was prudent to have those under control and have some flexibility when you buy those inputs and so forth. And then with our hog operation, we've always considered it a diversification and so forth. On the income side, never thought it would be quite the value on the input side with the hog manure, with the fertilizer, than it is now. And so that's been something we just didn't really see. It was always on the income side when we thought we were diversified. And so those are the moves that we've primarily made.
Well, that's very interesting. And I think one of the things that our international customers can also think about is, you talked about, both of you talked about buying things early, taking advantage of opportunities when you see them in the marketplace. And I think the shortages that we find ourselves in now is a good reminder that sometimes that's the right thing to do. David, how about you?
Kind of the same thing, Jim. One of the common denominators here is that early purchases. As we see these prices starting to take a turn, availability starting to be an issue. I got it busy in the marketplace and accessed a lot of crop protection, some of the chemicals, the chemistries that we use, and got those sitting in house. As we've seen some of those go up 400% and 500% in cost over a year ago. So it's unprecedented times from the inflation side of things. But one of the things that hadn't been mentioned, of course, I think we all probably do, we try to utilize our federal crop insurance programs as well to help shore up some of that risk as well. This year in particular, that's where we're kind of driving. I think you're in my own operation, the increase in soybean acres. That's one of the ways that we're managing risk is our environment's a little bit hotter, drier type environment, and soybeans are a safer play for us. So that's helping us take some of that weather risk out, and with the good board price that we're seeing in soybeans, also be profitable in doing that. So just looking at crop mix, that's one way to manage that risk as well, and doing everything we can, as I've mentioned, being timely. Timeliness is a way to mitigate risk as well. So we make it a point to have all the equipment, everything ready to go, and try to be as efficient and timely as we can and getting this crop in and taking care of it throughout the season.
Excellent. Well, unfortunately, I think we're about at the end of our time, or we are at the end of our time. I'm getting the hook from for the grower panel. But, I hope that all of you take away from this the sophistication of our growers, the very high level of management that is employed, and the sustainable operations that they run. So I want to say thanks, Tim, Jim, David, thank you so much for taking your time to be with us. And thanks for all the volunteer work that you do on behalf of US Soy throughout the year. Good luck growing a crop. I know many people are counting on you around the world to grow a nice big US soybean crop and other crops too. With that, I'm going to turn it back over to Mac, and I think he and Seth are going to go into a Q&A round at this point. Thank you very much, gentlemen. Over to you, Mac.
Fantastic, and thank you. Wow, that was a fantastic panel. I think anytime I hear from one of our producers, I I walk away learning a lot more. I mean, just difference in application, difference in some of the local conditions, and it really just, I think, puts a nice bow, so to speak, on just what it means to have a diversified operation. And Jim, I'll think about that very differently now in terms of diversification on the input side as far as manure. I imagine that definitely took you by surprise. We're starting to have some questions come in here. And Dr. Meyer, first one here, come from one of our overseas people. We're hearing a lot about crush expansion in the United States. What, if any, impact do you think this is having or had on the soybean intentions, at least as of this report?
Well, I think, first of all, I really appreciate hearing from your growers. They explain it better than I do when we start talking about these things, because they're giving you the preview of farmer intentions. Certainly, we have had good domestic demand, good domestic crush demand. So I think that that's part of it. And so I think that's part of what the market is reporting in when these producers are looking at prices of corn relative to beans. But I think the other part of that is as they've said, the input prices. I think that's probably the bigger story, a little bit on the surprise. It's not, we already expected maybe a little less corn and a little bit more beans already, just maybe not this much. So I think that demand kicked us in that direction, and then maybe the inputs helped contribute it, and that's why we're seeing that level of soybean acres.
Yeah, just a real confluence of events here happening on both, the supply and the demand side here. So again, kind of a perfect storm of contributing factors. Have a couple questions on inputs. First, as I've naturally we've heard a lot here. We started to have the run up in fertilizer inputs and costs, in the fall here. And increasingly, it looks like there could be a longer tail on this or longer duration. How are you looking at the fertilizer side of things? And given all the disruptions, what the potential duration of these disruptions could be?
So I think there's two issues here. I think you're right. Duration is part of this, and maybe geography is the other part of this, right? So I think we heard how our U.S. producers are dealing with this, depending on whether they're a little bit farther north or a little farther south and buying ahead. I think that when we first started to look at this run on fertilizers, maybe kind of hoping we'd be in a better situation by the fall of 2022 here in the United States. The war in the Ukraine has changed this a little bit. Russia, Belarus, these are countries which supply a lot of these nutrients into the global market, right? Now, we're somewhat fortunate in that we're not heavily reliant on the Russians, and we're not heavily reliant on the Belarusians. But other geographies like Brazil, that's their market. That's the Russians' market here for fertilization. So again, I think we've got a geography issue here. Confident that U.S. producers will do what needs to be done on this crop. Worry a little bit about the legs this NP and K issue has into the fall of 2022. And then we got to look around the world as well too, when maybe the Europeans are facing higher fertilizer prices, or the Brazilians looking to see how they can get those supplies from the Russians who they normally get it from. So I think there's two issues here, geography and length. Both of them are concerning.
No, you actually you answered one of the next questions that was coming in here, just around relative resilience or import dependence, I guess, on fertilizers. And we have a crunch here in the U.S., but I guess better positioned than other markets. I think particularly Brazil with the really high reliance, particularly on Russia. But maybe I'll expand the question a little bit. Over the last couple of years, we've seen China really re-enter the market as a huge buyer of U.S. beans, and certainly a lot of corn purchases earlier this season. And as we think about fertilizer reliance, China is also relying, I believe, on imported, fertilizers as well. I mean, there's some domestic production there too, but there's some input there. As China is looking to, I think, kind of restructure some of its soybean production, is there any concern about their ability, I think, to produce more domestically in the coming years, given this disruption as well? Obviously, a very large agricultural producer too. Obviously not for export, but still important to global balance sheets.
So you mean from a fertilizer standpoint, their ability to?
Yeah, just
I think we've seen them. I mean, they were concerned about this early. They put export controls on it and trying to keep as much fertilizer home as they can and secure their own supplies. So I think that we've seen those kinds of actions, which have also contributed to where we find ourselves in fertilizer market. This too didn't happen overnight, right? Russia and Ukraine have certainly added to it, but we had some of these positions in terms of some production problems, pretty solid demand, saw folks like the Chinese putting export controls on fertilizer. And then now we again have this extra element of Russia and Ukraine and the availability of those nutrients. And I think it's shifted a little bit. I think at some points, and I'd love to hear, I'm watching your producers' faces. Maybe first it was some nitrogen, and now we're talking about P and K when it comes to Belarus and Russia. We're fortunate that we get much of our potash from Canada, so our neighbors supply that to us, so we're in a good position in that regard. But I think we'll see, those prices are gonna see some strength, and the way those products are produced, that'll have some legs, perhaps.
So one last question here. As we, clearly this report is, a very important market signal that gives us our first, real survey-based look at this season. Over the next couple months, just in terms of data releases and market developments, what should, both buyers and producers be looking at in terms of forthcoming market information, either out of USDA or some of the other agencies, as we look ahead and try to navigate all this uncertainty?
Well, I think, and I'll describe them in kind of the reports that we put out, but kind of what are the elements that I think will get the most attention. I think when we look for April and May, we'll be looking at South American, the second crop corn. How is that crop developing? It gets harvested there in May, and it drops into the world market in the weeks and couple months before our own crop comes off for corn. But I think in May also we'll put our first look at the US and the global scale, and we'll put out our first report that tries to incorporate, hey, what's the latest on what we think North American production is going to look like? What are the effects of Russia and Ukraine? What are we taking away from US now that we have the planting intentions? That's the best information we have at the moment. How does that fit into the global balance? I think we'll watch planting progress. I believe starts next week in the United States. So it is a way to look at how are farmers getting into the field. I think that we want to see them progress rapidly. I think they want to progress rapidly, right? I think they're chomping at the bit, as we say. They're ready to get into the field. So the market will be watching our planting progress. And then absolutely, this happens every year, but maybe this year, even to more extreme, watching the developments of weather in the United States and how that crop progresses through June and July and even into August, obviously.
I think that May report is going to have a lot incorporated into it. I mean, every May report matters, right? Because you get the first balance sheets for the new crop marketing year, but certainly all these factors coming together is going to make that pretty rich and a lot of heavy lift on your side there for sure. I'd be remiss if I didn't point out, as we think about crop progress and everything, we're getting a little sneak preview because, as David said, he's already got a couple beans in the ground here. So there's an early data point. I think actually got time for one last question here because it does relate to weather and everything. I maybe some concern about soil moisture over the balance of the year. I guess typically, can that have some impact on yields? I guess it depends on geography. So,
So overall soil moisture, I think
Yeah.
right now what, and you know, I'm almost embarrassed to talk about this in front of your excellent producer panel who live it every day. But I think I'd note a couple things. We are having a significant drought in the West, kind of on the fringe of our corn and soybean area, and including in our winter wheat area. We're seeing drought over there. It's less of a problem, say east of the border of Iowa, kind of that area. It's less of a problem. Still something to worry about. We saw the folks in Iowa produce an impressive crop last year, despite what had been dry conditions for most of the year. We had 205 bushel an acre corn average for the state of Iowa, which is very high in a year where it was, you know, it seemed quite dry at different points. We'll have to watch that. I think, you know, there are some locations within our main corn and soybean growing areas that have a little bit of dryness. But again, I think it's probably too early to call out those effects at this point, and we'll watch as we go forward.
Certainly a lot of market developments to unfold, be it weather, be it, you know, external factors, you know, crush developments. This is going to be, you know, I think a very interesting year to be following. Not that any year in agriculture isn't interesting, but there's especially a lot going on here. Dr. Seth Meyer, thank you so much for joining the program. Really enjoyed our discussion here. Fantastic insights. Just really can't thank you enough for joining, especially on what had to have been a very long and busy day for you. So very much appreciated. Thank you.
My pleasure. And I really appreciate your producers and their inputs.
Well, with that,
Great.
it is my esteemed pleasure.
Thanks, Dr. Meyer. Thanks, Mac. Let me just try and hit a few takeaway points if I can. You know, we're in a world full of uncertainty. That's been talked about by virtually everybody here this evening. And I think as we are in that sort of a situation, it's really critical to look for supply chain partners that you can rely upon. And as you've witnessed in the last few years, and you just heard Dr. Meyer talk about, even if we had weather conditions that weren't ideal, the U.S. has grown a good crop, and it hasn't really impacted the availability of U.S. soy. And we are a strong believer in open markets and serving our world customers. And I think all that gives you somebody that you can count on in terms of a supplier. So I think the U.S. wants to be that supply chain partner and certainly can be for you. Secondly, you've heard from our U.S. farmer panel today that they are reacting to market need. And as we heard at a national level, and then our farmer panel talked about, we're planning that the intention is for U.S. farmers to plant more soybean acres this year. We see a need. The market's calling out for us to do that. And I'm so pleased to be a part of an industry that's reacting in that way. And finally, number three, we've talked about uncertainty and the importance of managing risk and volatility. Your employees, your investors, your customers, they need decisive leadership from you that doesn't rely on business as usual. And there's a global call for companies to mitigate the climate crisis on top of everything else. You're being asked to help mitigate the climate crisis and enable food and nutrition security around the world. Well, U.S. Soy is at the table and partnering with organizations to help them achieve those goals, be it in increasing protein availability, improving animal performance, or shrinking the carbon footprint. And I bring that last point up because I think some people think at a time like this, when there's all these other issues, maybe we shouldn't worry about sustainability. I think nothing could be further from the truth. Our farmers are still worrying about it. And I think now more than ever around the world, people are going to be looking for that and thinking about it. So I'm so pleased that our U.S. soy industry has an answer for that with the U.S. Soybean Sustainability Assurance Protocol. So thank you for your time today. Thanks for giving up an hour of your time, whatever time it is around the world, to participate. I hope you found it worthwhile. I thought we had absolutely great speakers today, and I thought we had great content. If you do have future questions, further questions, please reach out to your USSEC representative around the world, and we'll get back to you with answers. We want to be the organization that is there to provide solutions for you. So please stay safe. Good luck in your business. and keep thinking about US Soy as a reliable business partner and a reliable supplier. Thanks for your time. Don't forget the survey. We'll be sending out a survey and we pay attention to those. So please complete that survey as it will help us do even a better job in the future with these events. Thank you. Have a safe day. Bye-bye.